Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, March 21st, 2018. So I hope you guys were able to take advantage of the morning notes that I sent out to you today. And it was really more of a, just wait for the Fed to make their decision, and then from there, I had said I really was not too interested on, shorting or going long. But if we got to pop into the 2737 area, that's where I would be looking to short. And we made it up to 2738 and from there closed down. So anybody that took the trade at that level's up almost 28 points already. So, things have been working out pretty well. And I want to go over just really the whole strategy of things and how they look, and I'll go over the regular charts as well. But as you guys know, we work off of a time, sentiment, and technicals. And time is when to be looking for the trend to reverse. Sentiment is going to be confirming the reversal part, because the majority is always going to be, we're going to have sentiment extremes at tops and bottoms, and it usually takes place when there's a time period that we're expecting the reversal, that Woody's expecting it, and then we use our technicals to try to figure out where price is going to stop, and then we wait for the price to trigger. So I'm going to give you the examples of how things work here, and basically you have to anticipate the reversals, and that's from Woody, where he gives us our turn dates. You have your trading plan in place, and this one's going to be sell the rallies. So the technical timing indicator, that's what Woody gives us as far as the dates to be looking for the reversal to take place, and typically the market is heading up from there. And if it's approaching a top, you want to be looking to sell the rallies. Like I've been saying, you really have three options in this market. You have sell rallies, buy dips, or stay cash. So this is the sell the rallies example. And, if we're approaching that top date, or a date that he's looking for the market to reverse lower, you're going to be, looking for your plan in place is going to be looking to sell rallies. Sentiment is always going to be, the majority is going to be bullish, because we're going to see bullish or bearish extremes at both tops and bottoms, because the majority is always going to be leaning the wrong way, and that's really going to be confirming the the timing part of it. And then the technicals, we're just looking for divergences, wave structures, price patterns, and it allows us to look for where the reversal may take place. So then from there, we look at the trade trigger, and the trade trigger is you want to wait for the price to let you know whether to go short or not, and that is when you see a lower low, and it's not on a daily basis. I'll show you in the charts how they're triggered. But once you get into a short position, if we're looking for the top like we are here, you're simply going to put your stop at the previous high. So if it's wrong, which eventually some things are going to be wrong, your exposure is going to be limited on it, and you're not going to get hurt if it ends up going the other way. So you continue to do this. What you do is you layer in. It's almost like a stair step, and the way that you do it is fairly simple. Is you look for the first price trigger, you get short, you wait for a bounce, for support to hit, you get a bounce. Once it's at resistance, that's where you look to short again, and again all you're doing is putting a stop at the previous high. So you're limiting your risk on it, but if resistance holds and it goes down, you have another good entry, and now you have two, and you continue to do this same type trade. You're shorting rallies because you know when the low is supposed to come in. We give that in advance. So you continue to short rallies, and if you notice all the things that I've been sending out, that's exactly what I've been saying. We're in sell the rallies mode. So once you get to important support, what you want to do, especially since you've been layering in way above, if you're on the short side, you take some off, because you're not going to sit there and ride this forever. So you take some off and you look for a bounce, and this one was at the the bounce that we were looking at was at 2700. So I took some off. I explained that's what I was doing, and I leave some just in case we continue lower, and then wait for resistance to short the shares back I just covered, and today was 27.37. And you continue to do this until the next reversal date is coming, and then you switch sides, and now you're buying the dip, and you wait for the price to trigger it. So if we're now looking at a buy the dip thing, everything is the same. We're going to have we're going to know when to expect a low. From there, sentiment is actually going to be bearish. Everybody's going to be looking down, and nobody's going to be looking up. And what's going to happen is we're going to be seeing some support levels that are going to be approaching, and from there you wait for price to trigger. The same thing, and it's going to be a higher high, and then what you do is you turn around and you this is supposed to be long, sorry, but what you wait for price to trigger it, and then you put your stop at the previous lows, and that's your that's your risk on it. So your reward is that we're going to find a low, and you're going to get a 100-200 point rally like we saw on February 9th, which we were looking for that, and you just continue to do that until the next reversal date where you switch to the short side. Now there's times when things aren't going to work as planned, when we have a reversal date, whether it be a top or a bottom, and it doesn't follow it. So what happens is you're going to get in a trade, you're going to get stopped out. Does that mean you switch sides and go long and follow what's going on? Absolutely not, because you're going to have your sentiment that's still at the extremes. So if you're looking for a top and the timing indicator doesn't work, there's a date that came and it kept going up, sentiment's going to get more bullish. People are going to keep getting more bullish on the market. Technicals are going to be diverging, and what you really have to do is just you stay cash until you get a trade trigger, and that's really the way this works, where you're going to be able to get into it, limit your risk, and if it's an actual top, then what happens is you get a really good trade setup. So here's some examples again of just the actual reports, and I showed you this the other day, the February 27th report. And it was we were looking for the low on February 9th, and it was going to bounce near the March 8th, and then there was a few different topping patterns here. And what Woody had said, he said I would not get too bearish until he sees more trade, and then after March 13th. So that was it. So we knew the dates, and now we already know when the low is coming in. So it's one of those things that as long as you know what's going on, you're able to plan your trades, and that's really the way it goes on this. Is when everybody's bullish on the market, you're waiting for a trade trigger. When everybody's bearish on the market, you're waiting for a long trade trigger. And then from here it was just resistance, and we got some great trades in place. And here's the sentiment charts that I'm talking about. Everybody's bullish at the top, everybody's bearish at the lows. Even when we get short-term bullish readings, did we get drops in that pauses the rallies, especially since we're coming into a time period that we were looking for a top, but we knew the top was not in place yet. That wasn't a time period on March 1st. So it was another still buy the dip. And then once we got this 99% reading, that was the top. And if I go to the charts here and show you, this was the resistance area that we were looking. This has always been in place for members. So we knew that the top, this was our topping period. We knew sentiment hit a 90%, 99% long, and what we were looking for, this was your trigger right here. This is what I'm talking about, where we went down, up, and here's your lower low. 27.79 was the trigger on the short side. So once we got there, then we start looking at resistance. We got a bounce and we came up, so the resistance turned into 27.62. From there we had the big drop, and what I had said was, if you go back to where you get to support, you take some off. 2700 was support, you take it off, and then this morning was the 27.37. So I took some off here. I sat there. Once we got up to this area, shorted again, and right now the way this pattern is setting up, and it may change, but if it doesn't, this is a bear flag, and from there these lows should be taken out, and if they do, there's going to be most likely a panic trade into this support area. So now again, do you want to get aggressively short down here? Absolutely not. We're not at our low date where we're expecting the bounce to stick, But the thing is that you're going to get these bounces along the way until we get this clipper that Woody's expecting. So when it comes down here, we're probably, if it comes down here, I should say, and it finds support, and we get a bounce up to the 26.96, this would be the next shorting area. Now, the thing is, if we come down here, and the reason why you hold some short positions is if it comes down and it breaks these lows, so this is our range that we've been trading in. If it breaks this, there's going to be a panic low all the way down to the 25.89 or even down to the 25.33. So there's the range that's in there, so you don't want to, you want to take profits when they come. Once we break this range, that's when panic is going to set in. Now, if we just take a look at the 15-minute chart, really my line in the sand is this 26.63 level. I'm at 27.63. If the bulls get above it, I'm moving to neutral. But the way this pattern is set up, we should head down. But again, if it doesn't, my plan B is I move to neutral if we get to 27.63 and wait for the next setup. And that's really the way you have to manage this market. So we're overbought on the 15-minute chart. We don't have any bullish divergences down here. So that's telling us that we should get a drop. And what my target is going to be this 26.47. So I got short on my last one here at 27.37. That would be 90 points. I'm still have a short from up here at 27.79. And then I have another one at 27.63. Once we get to these levels, I take some off again. And if it keeps going, so be it. I still have a position on the short side, and then from here, most likely this is where we're going to get extreme sentiment readings. If it gets down here, everybody's going to be bearish on the market, and it's probably going to be coming in right into our low period. And when that happens, we're expecting another buy to dip. So you just repeat this process until we see the next turn date that's coming, and we know when that is, so we continue to be on short the rally. So right now this pattern looks lower. I wouldn't get aggressively short at the 26.47 level, but if this breaks, there should be a panic move someplace down to retest these lows. For the bulls, for the bears, they got to defend this 27.63 level. This is where I would be saying, okay, maybe plan B is coming in place, but right now the way the patterns are, I think we are heading lower. Just don't get extremely bearish when we get at support levels. So with that, have a great night, and I'll talk to you guys next week.